Watch us trade live right before your eyes from 5 a.m. to 7 a.m. every market day Pacific time. Join us now only on SwissFT.com.
Good day, traders. This is Richard. April 4th at 12:40 p.m. Pacific time. I'm looking at a crude oil chart, a 15-minute chart that covers 2 days, yesterday and the day before yesterday. There's some of today here. I'm not going to show today. It's not finished yet, but I want to show just a little bit of daily movement on a 15-minute chart. I want to squinch this up to where I see 2 days. You see a day, that's a day break right there. There's a day break right here. So let's put a little yellow line in the middle of that so we can see it clearly. Right there on that white line. Move it over a little bit. Now, what I'm showing, I've already circled a couple. And what I'm circling are my right-hand trades and my left-hand trades. So we're going to circle all that I can find in a quick study here. Now notice these are just as easy to find when the market is moving and you're watching it as they are to see after the fact. So let's keep on circling. Here's one right here. I'm drawing the circle right onto the fractal high right there. It's drawn onto the fractal high right in the center of the highest candle in the neighborhood. And then here's the lowest candle in the neighborhood over here on the buy side. This, of course, is the sell side. I call this my right-hand trade because it is my favorite. I like to sell more frequently than I like to buy. So here's another buy signal. Now let's get rid of that. Now there's one right here. Right next door, there's another buy signal right here. So I'm going to kind of spread it out over 5 candles. My right-hand trade consists of 5 candles because I'm going to show you my picture now, and then I'm going to hold up my right hand. Now here's my right-hand trade. See it? See, all 5 candles, all 5 fingers have different heights. Your thumb is always the same, kind of low. Your index finger's a little bit higher, but lower than your middle finger. And your ring finger is always a little bit lower, shorter than your middle finger. And then your little finger is even shorter than your ring finger. Now, you've seen my hand, you've seen the palm of it, and you understand what I'm talking about when I say my right-hand trade. It's this picture. Now, look at this. Here's this candle. There's my middle finger. There's my thumb and my index finger, my ring finger, and my little finger. That really doesn't matter if you face your hand or you look at the back of your hand, because the configuration is roughly the same. 2 short candles on one side, 2 short fingers on the other side, and then you have the middle finger that is your setup finger, setup candle. So I coined the phrase my right-hand trade simply because it perfectly illustrated what I'm looking at on a chart. Now, initially, you only see a few candles going up, and then you notice that they all have wicks on them. Here was one that was a right-hand trade, but it failed. Why? Because price went on above. Here's a right-hand trade right here. It's got a thumb and an index finger, and the right hand and the middle finger, and then the ring finger. But that little finger failed to go on down and went on ripping on up. So you didn't want to buy it. You didn't want to, you have a stop. We like to get three to 1 risk reward. That's our nature. And if you try for a 3 to 1 risk reward, that's all you need. If you want to make more money, you trade more contracts. But the things move like the things move. And in crude oil and gold and the euro and sometimes the S&P 500, I have an approximate $300 range before they turn. They're going to turn. So there's only a period of a short time that you have to work. So you find these fractal highs and you wait for them to form, then you take a risk right here and you sell that guy. If it after this candle jigs around a little bit, if it goes up and breaks out the top, well, you probably lost $70. Cost you about $70. And then you wait for another one. It took an hour and a half, 2 hours. Maybe these are 15-minute candles, so every candle, 4 of those is an hour. So it looks to me like 6 or 7 hours, but it's not that much. It's just about 3. But notice that this is for a full day. This started over here. This is 3 o'clock in the afternoon where the market opens. And then we got a low down here. And then it shot up like a rocket ship. In the evening, during Asian time, where oil doesn't usually move, but it's been so resilient lately, it's moving. So just notice how these 1, 2, 3, 4, 5 candles arrays formed. Now here's another one. I'm going to draw 3 or 4 more here. There's one right here. There's another one right here. Not a very big one, but another one. You never know how big they're going to be until they finish. And there's another one. And here's another. This is a buy signal, sell signal, sell signal, sell signal. Let go of that. Here's a couple of buys. All the course in 2. This is all in the course of 2 days. Now, crude oil trades at $1,000 a point and $10 a tick. There's 100 ticks and $1,000 point. And this is almost the last one. That's the next to the last one. And there's one more. Now let's quickly count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Now, let's say that the market is moving and it's just here. You're waiting for a trade. You're waiting for a trade. You're waiting for a trade. There's several trades in here. You really need to wait to actually enter your trade and see this secondary candle here not go above the primary candle. The primary candle is the fractal high that you see that gets your attention, and you start paying closer attention because you can scan through here and find out. Let's see what's happening right now. It's the end of the day, and we're just kind of clustering around in this arena. And here was a nice sell signal. And now we're lollygagging here, and probably will lollygag into the close. It's right now, it's 10 minutes to 1. So we got 1 more hour and 10 minutes to trade. Then the market will close for an hour. We try to take money out of the market every day. We don't succeed all the time, but we do generate an income. So this is the way we do it. I'm going to spread this out like this and just put these 2 in here like this. And I'm going to squinch this together down here so I can see the left hand edge. Now you got the right edge and the left edge, and you got 2 days of trading. How many trades are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. You will not get it all. Just try to get as much as you can before it goes against you. Now let's talk about going against you. Going against us here. We're always looking at ABCDs. So let's draw an ABCD on here. So here's an A, and there's the B, there's the C, and there's the D. The D didn't come in here. It didn't come in till here, but we got there. Now here's another ABCD right here. I could draw that in. A, B, C, D. Now just look at these. They're rough, but you can see how we're looking for ABCDs. And you always anticipate the ABCDs. And we have a tool that draws it on here for us ahead of time. It really only draws the ABC. It doesn't draw the D. Usually we have to figure that out. That concludes this video. And then you may see it again at another time. Short video to help you get a handle on what we're talking about.
Join us now only on SwissFT.com.